What a dismal performance.
Yeah, terrible, hey?
Yeah.
Markets really just following through from last week. We were down most of last week. Global markets were hit quite heavily. Friday we were down about 500 points. Today, as we can see, about 700 points. So just continuation of European debt crisis. This morning in Japan we had exports which came in at a much lower recording than expected.
Yeah.
That added pressure to Asian markets. We were down in the morning. We continued to trade lower throughout the day. And then of course we've got the US debt deadline, which is on Wednesday. The so-called a super committee, which is a group of 12 Republicans and Democrats are trying to agree on government spending and taxes, and they just can't seem to get an agreement, putting pressure on markets.
Absolutely, and I mean, it's reflected. Why are the resource stocks down so heavily today? We're seeing a bit of dollar strength, especially against the euro, but not to such a strong extent that we could actually see our resource counters this low. And given the fact that the local currency has also been weakening in tandem, it's surprising that you see BHP Billiton down 3.6%, Anglo-American shedding 3.3%.
Yeah, there was also some news from China.
Yeah.
I think his name is Wang, the Vice Premier of China. He actually said this weekend as well, on Saturday, he actually spoke, and he said that he sees a global recession as a certainty. So I think a lot of fear coming from that statement as well also led to why Asia was down today, and hence why global markets are continuing their decline.
That's interesting, because last week we actually heard that the People's Bank of China was willing to tweak monetary policy given the fact that we're starting to see a slight slowdown in the growth there. So it seems that they are ready to step in. They have said that they are going to step in if need be.
They should step in if they need to, but growth is still at 9.1%. Their previous recording was at 9.5%, so they've still got very high growth, and they did say that they are happy with that sort of level, at the pace that they are growing, and that's possibly put some pressure on the resources as well as the commodity prices. One can see the commodities have taken a big hit. Gold not as much as the likes of platinum and palladium and copper and silver, which have really taken a big beating in the last couple of days. That's added a lot of pressure to the resource sector globally, and just filtering through across the board, nowhere to hide.
Sasol down 4.25%, sitting at 369 Rand. I think UBS actually raised its target price on Sasol last week.
Yeah, Sasol's had a huge run in the last couple of months, last couple of weeks, and it came all the way when we were at our lows a couple of months ago. It was trading around 303 Rand. They paid a 9.90 Rand dividend, all the way back up to around 380 Rand, 385 Rand, somewhere in that region. Now starting to slip back a bit. So perhaps it was overbought, maybe a bit stretched, a bit pricey, and in the current market, and looking to maybe some investors looking to take profit and maybe take some risk off the table, lock in profits and move out of commodities and the likes of Sasol and the big diversified miners like Anglos and Billitons, and one can see that by the Rand, as you mentioned as well. I mean, the Rand trading at 8.30 Rand, it's depreciated by about 15% for the year, so a big depreciation on the Rand. It just shows that investors are really looking to move out of emerging markets and invest back into the US currency. That's why the euro has been so strong, for reasons as we all know.
The natural repatriation of money.
It's just a natural cycle that will just continue.
Able out with results today, and actually a strong set of results. Headline earnings per share up around 24%. Company going from strength to strength, and this is the question we keep asking, and the company keeps surprising to the upside. How long can it continue double-digit growth for? Look,
those numbers, I mean, as Able was down today as well, 24% is good numbers, although analysts did expect slightly better numbers. They expected an increase of earnings by about 27%, so it slightly missed earnings expectations. They're managing their bad debts very well. I think the numbers will continue to grow, but one must just be cautious as well with Able because of the interest rate environment. They've got Eleni, the retailer business, and with low interest rates, they'll be able to manage and look after those bad debts quite well. But when interest rates start to rise sometime next year,
it doesn't help the fact that they actually bought Eleni as well at the top of the cycle.
Yeah, well, look, that's actually been a good investment for them. They're managing their own book there, and it's actually provided them with very good revenue, and it will continue to provide good revenues going forward.
Telkom. We saw quite a bit of pressure coming through there. Of course, we know that startup costs with regards to ATA, that also being having quite a big impact, but still quite a nice dividend for shareholders.
Yeah, look, their dividend is not too bad considering the mess that they're in. Management has been a disaster for a couple of years now. They've gone through a number of CEOs, as we all know. It seems they can't seem to find a good management team. There is some sort of pathway for them to start to do better, but they just can't seem to get it right. As I said, on a number of CEOs, they've invested a lot of money into ATA. They've just actually registered their 1 millionth user with ATA, so starting to generate revenue from there now. But there was a huge CapEx project which they invested a lot of money into. They also did a big acquisition and tried to get some business going in Nigeria, where they've lost R1 billion or so. So not looking good for Telkom, not a company we like.
It's down 2.5% today. It's sitting at 29 Rand.
Yeah, with the rest of the market. I guess it's in line with the rest of the market. As I said, nowhere to hide, and also on the back of the results. So yeah, they need a recovery path, but at the moment it doesn't look like that will come anytime soon.
Truworths was threatening to get into positive territory for the most part of the day. In fact, we did see a little bit of positivity with regards to Truworths, ending the day down around 0.5%. We spoke on the resource space, and it seems that maybe a little bit of negative sentiment is starting to filter through. But looking at the overall sectors, where would you be parking your money right now?
Yeah, it's tough. Look, I mean, Truworths probably slightly will not hit as badly as the rest of the shares in the market on the day.
Retail sales were fantastic.
Retail sales were good, up about 8.6%. That's correct. They beat estimates as well. So I really think it's more the defensive stocks that are holding up better in this sort of market compared to the resource sector. In fact, all the sectors were down heavily on the day, but a couple of stocks managed to hold up slightly better than the rest, as they are a bit more defensive in nature. And with regard to where I'd be putting my money now, where we invest in clients' money, it's very difficult at this sort of time. It's been for the last few months, it's really been
What are clients asking for? Do they want exposure to equities?
What do we buy? What do we sell? That's generally the question. Look, we've got to, trade very carefully and cautiously. Markets are really tricky at the moment with the whole debt situation in Europe, so one has to manage one's risk very carefully and look for pockets of value. The markets have pulled back slightly now. It has been a buy the dip scenario for the last couple of months. Perhaps this is one of those scenarios again where you should be buying the dip. But if you are looking to buy into this market at these sort of levels, maybe it's not a bad idea. Anglo's below 300 Rand again. Billiton's around 235. Perhaps start to accumulate stock at these levels and ease your way into it. I wouldn't be taking a full-size position around these levels, and perhaps we'll get a bounce.